What I'm about to report to you very well could be the beginning of a negative sentiment towards gold in the markets. This is a big deal, and many didn't see it coming this soon. Let's talk about it as we explore. There is a report coming out of Zero Hedge about what has happened in the market today. In fact, all the precious metals are down, with gold taking the biggest hit today. That's right. Silver has fallen too, but not as much as gold, and there's a very specific reason for that. Gold is down 1.6%, down $54 to $3,235.30. Now, obviously, that's still very high, but it did flirt for a while right at the $3,200 mark. Silver, it only fell 0.7% moments before the markets close. It's down 22 cents at $32.47. Now, I'm going to talk a little bit more about silver maybe in a future video, as it has now fallen below the number that I had celebrated, $33 for a while here. Platinum and palladium also fell as well, but not nearly as much as the other metals. So this is an opportunity, I believe, especially when we're looking at gold taking a further dip here today, especially for the reasons I'm going to talk about here in a moment, to consider. Next time you're in the market, look around, shop around for the best deals out there. I think you're going to find that Summit Metals has some of the best deals, especially for fractional gold. Now, gold is still expensive, no question about it. And so you have to weigh as to whether or not this is going to be a new reversal trend, or if this is going to be something that's just temporary, and maybe it's just about strategy, a little temporary strategy before gold continues to move back up. I kind of hope it does pull back so I can buy some more, but nonetheless, some people feel that this is the very beginning of a new trend, and gold's going to just continue to plow on through to $4,000. Others, like me, feel like we're near the top, if not at the top, and start seeing it pull back some. Maybe not too much, but I think that gold's been on a good run so far, and there's not much more that could pull it up, save for a disaster in one form or another. But what's happening is China is dumping stockpiles of gold. Zero Hedge is reporting that after a period of significant gold buying that pushed prices to record highs, recent engagement with near record liquidations, which has reversed the upward trend. 1 week ago, China seemingly couldn't get enough of gold, and the price of spot briefly touched a record $3,500. And actually didn't quite get there. It was within 30 cents, I think, away from it, but nonetheless, we were very close. Among other things, staggering inflow into China's gold ETFs, such as the Yuan, Wifu, Bosera, and Goldtai gold ETFs. And we talked about those record inflows of gold ETFs, but as all things momentum-based in China, it's easy come, easy go in the land of dragons. And the Goldman commodity trader Adam Gillard writes, China liquidated what it bought last week ahead of the Labor Day holiday, resulting in total onshore positioning now 5% off the all-time high. And while China's share of total open interest remains on the highs at around 40%, upward momentum may have peaked for the time being. And so the story of gold buying and then selling essentially is something that we're witnessing right now. Last Tuesday, gold made an all-time high in China, added 1.2 million ounces of positioning across the Shanghai Gold Exchange and the SHFE on record volume. And then China liquidated a near record 1 million ounces across the SHFE and SGE, reversing the entire April 22nd blow up off top. Now that is something. Wow, crazy. And now, according to Gillard, who confirms the recent observation that all recent price moves take place exclusively around the time China opens. And we watched the market open in China and in Asia in general every Sunday night at 6 p.m. Eastern Time. So it'll be very interesting to see what happens as we roll through this week and into next week, because a lot of this not only has to do with that, but also a potential progress in negotiations with the trade talks with China. And China is having a disproportionate impact on price because they execute during an illiquid part of the day and the morning in Asia, which likely triggers ex-China CTA trading signals. Sure enough, gold is dumping in early Asian trading at the lowest level that we've seen in 2 weeks. But I tell you, this is something else, and if this continues for the coming days, who knows? The sentiment is certainly still bullish on gold overall, and central banks themselves are not liquidating. So I think what happening in China, especially with what I reported on earlier, with them making record numbers of purchases with the ETFs there in China, I think it's going to have somewhat of an impact, but maybe not as much as you may think. I still think there is some support for gold, likely in the $29,000 to $3,000 range, but you never know. It just depends. And now all that could change if central banks actually let go of the physical, but I don't see that happening anytime soon. But, these markets and the way China is operating is something that is quite interesting to watch. China is a crucial area in terms of economic activity and production, and that can have a big impact not only on gold's price, but also silver's price. And so it's always important to see what they do. But I was surprised to see this happen today as so quickly. Just within last week, they buy a whole bunch of gold positions and then sell it on record volume. It's mind-blowing. But I've not seen that happen before so quickly in the gold market. Gold is one of those metals that typically, even if you buy the exposure to the price, which is what ETFs are, typically it's one of those things where you don't really like to play around with it too much. That's not what happened in China, though, obviously. Stocks or day trading is typically not for, the precious metals market. Although I will tell you that over the last 18 months, if you're going to do it, the place to do it probably would be in ETFs with gold and silver because of the radical volatility, even in the gold market. Of course, it's been a winner for the most part, especially for gold. Silver, it's been a mixed bag. Nonetheless, silver has done well. But I'll continue to watch it. But, it is interesting and fascinating, watching these markets move as they have, where it's going to go from here on out. But we're going to keep an eye on it. Now, for me, I'm not ready to make a purchase yet, but, it just depends on how and when you can position yourself and how much more movement to the downside this could happen. Likely, this move with this selling that's happening in China is not going to just reverse anytime soon, unlikely, which means that the prices are probably going to stay kind of where they're at for now. And if there is further talks in progress in terms of between China and the United States on trade, then I think that could bode well for lower prices on gold and silver. And it's just a matter of where that bottom is. So timing your purchases is crucial here. But of course, no one can really know for sure exactly what's going to happen, when it's going to happen, what could come out of left field or right field or center field that can move the markets one direction or another. That's the thing. It's hard to predict. It's hard to say. You try to do it, but no one really knows. But nonetheless, holding gold for the long term is something that I value and I continue to do. And it's served me well, and hopefully it has served you as well. Also, this is what it means to stack gold and to hold it. In the end, we win because it preserves our wealth. And that same can be said about silver too. It just takes a lot longer for that to happen, depending on how and when you buy it. Strategy is important when buying precious metals, especially in the physical form, because you are trapped, in a sense, by the premiums. There is a cost to hold the physical, and that premium you're not going to get back when you go to sell it, for the most part. So there you have it. What an interesting day in the markets indeed, with what's going on with their holiday and this selling. with the gold price. And other headlines certainly have other things too. China slips a 2-week, gold slips a 2-week low on trade talk hopes, Chinese holiday. And gold falls as prospect of U.S.-China trade talks cuts haven demand. And that's just it. When people feel comfortable, they're willing to take greater risk. And, so gold being a hedge, they're willing to escape a little bit, to take some of that money away and put it elsewhere in order to take bigger risk. Gold is the ultimate safe haven. But in order for it to really do that, you got to hold on to it for a while. In fact, it's really crucial, I think, to be buying it when the prices go down, rather than when they're going up, to provide that safe haven. But that's typically now not how psychology works in the markets. This is why I feel like we may be near or at the top for gold's price, or maybe we were there before. We'll see how it plays out. But nonetheless, let me know what your thoughts are in the comment section below. I like to bring you the latest news in the world of precious metals. So if you enjoy what I do here, I hope you will consider subscribing to the channel. And I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.